Hey folks, David Frost, my strategic forecast. You're here for another episode of Common Sense Market Analysis. Today is Tuesday, November 20, 2018. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. Obviously, there's a lot going on. We have a lot to go through tonight. We're going to go through every last bit of it. Before I do that, let me get the housekeeping out of the way. Thank everybody for participating, continuing to make comments and posts underneath the videos each and every night. I really do appreciate the participation. Please keep up the great work. In addition, please hit the like button on the video and share the video with anybody that you think can benefit from this information. So let's get into the markets. So we had a thrashing today, and I want to address something right out of the chute, and then we'll get into uncover what's going on out here in the jungle, otherwise known as the market. I understand people are anxious out there. That's what the market and money does to people. I get that. I've gotten a flood of emails, messages, posts, all kinds of stuff, anywhere you can imagine, with all kinds of stuff. I just want to address a couple of main topics that are coming in so that I can kind of get it all done in one shot. I just can't answer all of them. It's impossible. Most really aren't questions. They're more statements, and that's where I'll start. I'll start with, you're wrong. The market's still falling, and you were looking for a low. What part of that is wrong exactly? So, for example, got a lot of messages about being wrong because the market's falling and I was looking for a low. Let me explain what happened from last week. So, last week, we discussed a few things that I was interested in buying down in this zone down here. Now, I didn't buy the market down there per se, well, maybe intraday, but from a swing trade perspective, I did buy some stocks down here. You can go back to the videos. We discussed it at the time. Obviously, a lot of them went up a very large amount of points or percentages in a very short period of time. Obviously, you take profits when that happens and you move along. Now, I still have some of the positions that I did buy then, but I want to address the whole conversation. So, a video was not made on Friday night, but can anybody guess what I would have said on Friday night about where price was? So here's where we were. We had to go above, or we had to close above, that particular breakdown candle high in order to continue the upward swing in the market. We talked about it before price got there, and that's what would have happened on Friday night if I made a video. Price was rejected at that point, and we went back down. We also discussed, here's your bogey. I talked about this at least twice, probably emphasized it more than twice within the video, specifically last night. I said, there's your bogey. Closing hourly below that and certainly daily is not good. We gapped below that level today. What does that tell you? Is it bullish or is it bearish? I also said that I don't want to find the market hovering and closing down in this area here. That wouldn't be good. Where are we? We're down in that area now. I told you that at least a week ago. I also told you that again yesterday. That was probably for at least the third or fourth time. I said, if this gap doesn't hold and we go down this breakup candle, where would the support be? The low of that breakup candle, that happens to be 263.12. What was the low today? The low today happens to be 263.15. Was that area supportive of price? Let me show you a little deeper of how that works. So I just picked an arbitrary number, 263.25 it showed up at. We'll see a 10-minute chart. Look what happened around that area when price got to the low, around the low of that breakup candle. We took off to the upside. We came back and retested it later in the day, and it still was supportive. So again, those of you that continue to tell me I'm wrong, please tell me where I'm wrong exactly. In the course, I teach what we look for specifically, and I also discuss it here quite frequently. What we look for, and I call it signs and a signal of a trend change. Have we seen that yet? We had the makings of one last week. I said this looked like a reversal. We need to see follow through. We never closed above the high of the breakdown candle. And what happened? The market was rejected. So it was a fake out. Yes, it was. But we know where we're wrong. Do we or do we not? We knew what it was going to take for the market to get bullish. We were going to have to close above that breakdown candle high. Now, from day to day, we don't know exactly what to expect. Do we know to expect a gap down of 50 points or a gap up of 50 points from one day to the next? No, we do not. What we can do is take the information on the charts and use it to our advantage. We know where the market gets bullish. We know where the market begins to get more bearish. We have our support levels. We know begin closing daily or hourly below or above certain levels becomes bearish or bullish. And guess what? The majority of the time, those particular price levels work out to be correct. Do they work out to be correct 100% of the time? No, they don't. Do they work out to be correct a lot of the time? Yes, they do. The other segment of emails and messages that come in are, here's what I own, what should I do, I'm getting killed. I get those. But you also have to understand, I can't give individual advice at any degree whatsoever. So here's the way that works. If you're telling me you own something, then I'm going to be reluctant to engage in a conversation about it. I'm happy to tell you where a support or resistance level is on something arbitrary, something I own. I have no problem with that. I just need everybody to understand that since I know nothing about anybody's individual personal financial situation, I just can't get involved in giving individual advice. It's the wrong way to go. I can tell you what I own, I can tell you what I think about a chart, I can tell you what I think about the markets, and that's as far as we need to go. The whole idea is, my objective is to teach everybody as much as I can about how to read the markets, how to read a chart, whether it's on a short-term chart or a longer-term chart. We know they all act and react the same way. I prove it in the course over and over and over again. So the objective is, if you learn how the market works and you learn how to read the charts, then you become self-sufficient. That's the idea. Now, with all that being said, let's move on to where are we? What happens from here? It's ugly. I get that. Everybody's looking for a low. Now on television, they're all of a sudden talking about exactly what we're looking for, and that's not good news. Let me explain. They're starting to discuss, we're looking for a gap down, we're looking for a capitulation low, we're looking for a reversal intraday. They're telling everybody what they're looking for. It's the same thing that happens when they start talking about head and shoulders patterns on TV. They tend not to work out. So that being said, how do I interpret that? Well, I don't have to interpret it. I'm going to interpret the charts. I'm just telling you I don't like the fact that they're talking about it. So here's what we have on the charts. I don't love the close. I told you I didn't want to be halfway down or more down to the low of this breakup candle. And that's where we finished today. We finished halfway or below that breakup candle. So that's ominous to me, but we did not close below, nor did we even get below yet the low of that breakup candle. So here's what we're doing. We're using, as we were before, the low of that breakup candle on hourly closes and then daily closes as the bogey. That hasn't changed. If we gap down below that level tomorrow, I can tell you there's a fair chance that we're not going to stop at the lows down here and we're going lower. The next question is, and regardless of whether that happens tomorrow or not, the question is, where is the actual low going to be if it's not going to be inside the October lows? The October low was 259.85. If we're going to spike through that, to where are we going? Here's a weekly chart. We're going to go through, in my opinion, the 100-week moving average, if that's the case. If we're going to go down, continue down tomorrow and or beyond tomorrow, maybe Friday or beyond. Thursday, obviously, we're off. Friday's a half a day. If the market's going to make a new low, I'm targeting 255. We've talked about similar numbers before in the past. I didn't keep it on the chart. Here it is again. It basically coincides with the lows from April. Here's a low from February. That low is 253, and this low here is 255. I'm rounding. We don't know if I have it at 255.21. I just popped the line, the trend line on the chart. I don't know whether it's going to be 254, 255, or 256, but if we come down and spike through the previous lows, the October lows, we're coming through the 100 period moving average. We came too close and rallied up before. and then the next stop should be around that 255 zone, give or take $1 or so. And it could be even more than or so. Could be down to 252, 253. There's really no way to tell because it would be what they call a flush. This would not take place over a multi-week period of time. This is happening when you wake up in the morning and they get it done. They may stay down there and test it for a couple of days, but that's the way it's done. It's done rather quickly. Remember this? This is the beginning of the year. This is February of 2018. This is April 2nd of 2018. Do you remember the feeling down here? Wasn't the world ending? And then we rallied and everybody forgets what it felt like down here. Then we came back down for the retest. We're going to make new lows. We're going much lower. Everybody's bearish. The world is ending. Everything is horrible. Bad news is bad news. Good news is bad news. Fantastic news is bad news. Remember that? Do you remember the feelings? Go back and look at the news articles in this time period at the end of March into April 2nd. Look at the news articles in January and February, late January into early February of 2018. The world was ending. Here's where we are today. It looks somewhat similar. It always looks similar. It's never the same, but it's always similar. Yes, we could make new lows, but we're not going to zero. This is precisely the reason why I discussed buying individual stocks and not the actual index or the market itself. There will come a time when I'll buy the index. When I see a reversal, an intraday reversal, a daily reversal, that's fine. But the individual stocks I'm buying at what I determine to be support areas where I'm willing to put on my risk capital. And by the way, when I do that, I'm not expecting to pick off the bottom. Sometimes it happens, but most of the time it doesn't happen. So when I buy a stock, it's not abnormal to be underwater. I'm buying stocks into what I think is support. It could spike through a little bit. I'm looking at a longer term picture. These are swing trades. I'm waiting for the market to turn. When it does, it's going to be like lighting a match. And you know that little thing that runs when you light the match, that wick that runs up to the bomb? That's what happens. You light the match and it's percolating, and all of a sudden, one day the market takes off, and all of a sudden, good news is good news again, and everybody forgets what it felt like last week. That's the way it works. Over and over and over again since the beginning of time. Can there be a lot more downside than I'm discussing? Anything's possible. I'm giving you my best efforts on what I think is happening. For now, as long as the low of this breakup candle holds, and this is from the 30th of October, as long as that holds on closes, that's okay. I suspect it won't, but as long as it does, it's okay. The IWM, obviously taken out behind the woodshed, down 2%. We're coming to the lows in the IWM. Once and if we break those lows, where do we go? When you look at the weekly chart, here's what I've got. Call it 142 to 143. I've got it at 142 and a half. There's a low here. That's important from the 9th of February. That's important because the market's telling you it's important. No other reason than that. Look at this. When the market makes a bottom like that and takes off to the upside, when it comes back down to revisit that bottom, what's the likelihood that that bottom is important? It is likely. There's also another area on the chart that supports that case. Intraday, intra-week. Can we go lower? Absolutely. That's why I put another trend line on the chart, slightly lower, about $5 lower. It's not really slight, but that's where it is. That would be on a big flush. That would be 137, give or take. That would be an area that would also be, and traditionally will be, supportive of the market. Keep in mind, this IWM chart we're looking at is a weekly chart. That means that these numbers I'm giving you are important to the weekly close. So for example, if we close the week, let's just say at 141, so it's below where I think an important number is 142 and a half. In fact, the actual number, if you want to get specific, is 142 and a half. There you go. So let me change that. Okay, don't like to be off by a penny. So 142 and a half is a number. If we close the week, So Friday's close at 141, that to me would be bearish, and I would think the pressure would be to the downside to go to the next important price level at around 137. Doesn't mean we have to get there, but that would ultimately be the direction that I would expect us to head, because closing below 142.5, I think would be a big deal in this case. The transports. So this is the weekly. Let me go back to the daily chart and the transports. So the transports, last night I'm talking about the fact that this may be the canary in the coal mine and it's a bullish pattern. And it was. And what happened today? We got below. As soon as we got below that low, it was off to the races to the downside. It was just game, set, match for the transports. Watch this. I'll prove to you the importance of that number. You can do this on any chart, especially in a bearish market, and you can flip it on its head and do it in a bullish market. In a bullish market, what I'm about to show you is a pullback. Here, this is essentially the market coming back to retest the underside of an important level and get rejected. So I've got this trend line at 10,334, 335. The exact number is not important. My point is to show you that it's around the low of this breakup candle. The low is 10,337. So we'll just put it up a little bit, okay? It doesn't really matter where it is. Okay, so when I go over to a 10-minute chart, you'll see what happened. So the market had a hard sell at the open. We tried to rally back to recapture that level, and it was rejected and sold off the rest of the day. So that shows you the importance of that particular price level. Now, what about the transports? This chart still looks better than all the rest. Can it still be the canary in the coal mine? You betcha. On a closing basis, I think we need to have 10,000 hold. So 10,000 is down here somewhere. There's 9,999. We'll just put it up around 10,000. 10,000 needs to hold on close. We close below 10,000, we'll take out the lows. You stay above 10,000 on closes, this chart remains looking better than all the rest, and I think it is a potential canary in the coal mine. We discussed it last night. It's been a canary in the coal mine before. It will be a canary in the coal mine again. I like the transports. I think the transport chart is trying to tell us something. If I'm wrong and we make new lows, back to the drawing board. But right now, it still has, believe it or not, even after a 3% down day, it still has relative strength on the daily chart compared to the rest. The Qs, taken out behind the woodshed. Actually, I'm going to take that back, and I'm going to say, yes, the NASDAQ was down a lot. It was down almost 2%, but there were some tech stocks that weren't taken out behind the woodshed. It's interesting. We're going to run through some stocks. Some were, but some weren't. I think it's interesting. There's some green shoots out there. Again, I hate that term, but I think it's appropriate to use it. New lows in the Qs. 159, 158.80 is where I had that trend line. So around 159 turned out to be important today, but we still went a lot lower. Now, when I put these horizontal trend lines on the chart, when I put them on a daily chart, understand that that's a daily price level. So what that means is if we get there during the day and we go lower than that price level during the day, and then we rally back to close above that price level, that still counts. That still is an important daily price level. Intraday, the daily price levels don't necessarily hold all the time. Sometimes they do, but they don't all the time. That's why we use hourly charts and shorter charts for intraday. In fact, I use other charts as well. 180 minutes, 240 minutes, 480 minutes. That's half a day. So I use a wide variety of charts. But from an intraday perspective, you have to go down below the daily chart. These are all the things that are discussed, taught, and harped on within the course at Lazy E-mini Trader. There's your weekly 100 period moving average. I mean, I don't think they stop there. If we're getting a hard sell, there's a pivot down here that looks like a really, really solid spot to be. It's $1.50. It's hard to argue with $1.50. So you have an important low. Let me get rid of that other pen. You have an important low at $1.50. Okay, it spikes through the 100 period moving average. Let's just get rid of that for the time being. That's another level. It's only a couple of dollars below $1.50 or $1.50, $100.50, $1.50. I like $1.50. And then below that, basically 147, 148 is just another area of support. So anywhere in this zone if we have a hard flush, a hard sell, capitulation, everybody's getting thrown out with the bathwater, margin calls, hedge funds failing, rogue fat finger trades that went off for millions of shares by accident. You'll hear all kinds of rumors if we get that type of flush capitulation morning that we're really looking for. Had the makings of it today, but really wasn't the type of fear that causes bottoms. You'll get all kinds of rumors. A sovereign wealth fund failed, hedge funds failed, they had to liquidate. All kinds of things will come out of the woodwork. And after the fact, nobody will ever be able to validate any of them. Remember yesterday we discussed the financials? Here's the XLF, and the XLF was down 2% today, so nobody wants to be down 2%. But again, while the chart doesn't look great, this is a weekly chart, when you go back to the daily chart, we're at an important area. If this low holds on a daily chart close basis, a closing basis, if this holds, and that number happens to be 2603, 2603 holds on close, that's a good sign. However, there's a gap down here, but we're nowhere near the lows from October. So this looks more like the transports than it does the spiders and the Qs and the IWM. So again, without the financials really scaling down, without the financials unraveling, it's unlikely that the market's going to scale down another 10 or 15%. Unlikely. If something changes and the floor drops out of the financials, then that's something different. But right now, the financials and the transports are really telling us that it's not all sellers out there. Where else do we find similar information? How about the SMH? The Philadelphia Semiconductor Index. The SMH is the exchange-traded fund that tracks that index. Look at that reversal today. So there's another green shoot. I hate that word, but it works in this situation. Here's an hourly chart. First candle of the day bottoms, and we basically go slightly higher and then go sideways the rest of the day. That looks like a bottom to me on the hourly chart, so anybody wishing to trade long the SMH can do so against today's low. Certainly can do that. One of you out there was long NVIDIA. I had an email exchange last night. We talked about some numbers. 133 and change was one of the numbers, and 133 and change was one of the numbers that caused the bounce today in NVIDIA. The low was 133.31. It was just very difficult to figure out which number it was going to be because there's so many gaps on this chart. When you go back in time on the daily chart, if I can just scroll back the chart a little bit to show you what I was looking at. And this is just for, not necessarily just for one person, but we can always learn something when we look at charts. You have a gap here. You have all these different areas that could be supportive of the stock price. So here was 143. We cut through that. That wasn't today. That was the other day. And then, you had a low here, 138, 139. You had some lows here. You had a gap down at 133, and it turned out to be just about the gap. They didn't actually fill the gap. They came close, but that was a tough one, and I understand how it felt being down as much in NVIDIA as you might have been. But that's a moral victory for NVIDIA today. That's a reversal along with the SMH. That could be, and I talked about this many, many times before under different circumstances and also relative to this circumstance. Money doesn't all shift at the same time. You begin to see money that rotates out of sectors and into sectors, not all at the same time, but one at a time or two or three at a time. That may be what we're seeing today in the semiconductor space. Here's a weekly chart of NVIDIA. Where were we in October, right? This is October 5th. The week of October 5th, we were at a high of 292.76. That's a lot of points in a short period of time. I bought Apple today. I told you I was looking at 183. We had 183 and 190 on the chart before. I said somewhere in that zone, but my preferred area is 183. So maybe I got lucky today, maybe I didn't. We'll find out after the fact. But we gapped below 183, so I got an opportunity to buy it lower. So here's a little market psychology, and this is a tough one to wrap our head around sometimes. I'm willing to buy 183, and the stock gaps below my number and trades down to like 176 or whatever the number was. Where was the low today on Apple? The low was 175.51. I'm in at 177 and change, 177.56, I think. The point I want to make is if I'm willing to buy Apple at 183, and this is not because I think it's going up tomorrow. This is because I think the market's going to turn. I'm looking for a low. I want to own various stocks that nobody wants right now. Everybody hates them because when they turn, they're going to be up a lot of points in a very short period of time. I've been to this rodeo many, many times before. So that being said, if I was willing to buy Apple at 183, wouldn't I be willing to buy it at 177 or 178 or 179? And the answer is yes. Nothing changed. It just went down more this morning because of the market and the gap down, and maybe Apple was a big reason why the market was down. What difference does it make? Apple was down $9 today. I don't really care what the reason is. All I care about is, did I get it at what I think is a good price, and it's an opportunity? Now, I'm a little bit underwater, so what? I don't know exactly what day the market's going to turn, but I know a turn is coming, and I wanted to own Apple if I could get it at my price. I got it at my price. If it goes a little lower, I might buy a little more. I might stay with what I have. I'll make that decision in real time. If something crazy happens, and I can buy Apple on a flush in the 160s, for example, 166, 167, will I buy more? Yes, I will. Facebook has been one of the worst performing stocks of recent. Look at that chart from the high. So here's the date. From July 25th, at a high of $218, it's now 132 and change. I think it was a low today of 126 or 127. Low today was 126.85. That could be a reversal. We'll see. Need some follow through. May not be done yet, but certainly it's trying. In other words, you can see where money is trying to pick some spots to rotate into. Either the majority of the sellers have left Facebook already, and there are some bottom fishers out there, or it's just trying to find a low. Similar in Amazon. Amazon was down $17 today, but $17 is not a lot of money in Amazon. That's just pennies on any other stock. It was down a little over 1%. It's not a big deal. So Amazon was down much more. Look at that reversal. I think we talked about this one last night. I gave you 1457 and 1409. Where did we come to? Right in the middle. Almost got to 1409. We also were as high as 1534 today. So you can see when these things decide to rally, look what happened. When these things decide to rally, they take off very, very fast. A bout of short covering hits the market and it becomes panic buying in a hurry. Netflix. Did it find a low today? Maybe, maybe not, but you can see where it's trying. We talked about Google last night. I said, does Google have to go down below $1,000? What was the low today? 1,002.21. That's a game of cat and mouse. Google's trying. Maybe it flushes one or two more times, but you can see where money is looking for a spot. I'm not the only person out there looking for a low. I'm not the only person out there buying stocks. Baidu, here's one of those Chinese companies. Is this a sign or a signal of a trend change? We spiked through a previous low, came off the bottom. It's a possibility. These are the type of things that I look for. Can you trade that against today's low on a daily close? Yes. Alibaba, I talk about this one frequently. I am an owner of Alibaba. Didn't have a great day, down $4. But does the chart look terrible? No, it really doesn't. It looks like a flag pattern. Now, I'm manipulating the chart to make it look like a flag pattern when I draw the flag up there. It's not really a flag pattern, but it can be bullish consolidation. Below here, I'm not comfortable. Closing below 139.97, and I'm not in love with it. For now, I'm okay with it. Sina, another Chinese name. You can see where it's fighting that 58 and change level. It's done it a bunch of times. It did it again today. Does anybody think that level, that price level, is important to this stock? I would say so. All right, this video is getting long in the tooth, so we'll cover gold and oil and then move it along. So the gold chart, nothing really happened today. We're down a couple of bucks, $3. And you can see here we're finding resistance at this breakdown candle high. That's normal, common market behavior, right? So I think we closed above there already one time. So the high was 1224 spot 60, and the close here is 1225 spot 30. So we closed above it. To me, that's kind of a smoke signal. So we talked about higher prices. 1232.50 is the next area, and then after that, you look for about 1240. What's the high here? 1240. That's basically the secondary target on the upside. Crude oil. So crude oil recaptured 57 yesterday, and then today they hit him. They took him out behind the woodshed, shot him 4 times in the back of the head, and left a suicide note. Basically, what we talked about a few days ago, we talked about it 2 or 3 or maybe 4 times, is if 57 doesn't hold, 53 was the spot. So that pretty much all happened in one shot, I guess. I mean, we spiked through 57 the other day, came down to a low of 55, tried to rally, and then they hit them. The low today was 52.77, and they're above 53 now. So splitting the difference, 53 was the number. I know everybody's focused on stocks and the stock market and the index and all that stuff. Did anybody buy the bond market down here with me? Down here at 112? Anybody? Anybody? Bueller? All right, let's give it a wrap. So to wrap things up, don't be surprised if you see really one of those woodshed mornings. It could happen. You could find the S&P 500 down 100 handles, and that could be what we're looking for. It is a possibility. I'm not saying it's a probability. I'm not saying it will happen or it has to happen, but it certainly can happen. And with that, on that note, I will bid you a good night. I'm David Frost, my strategic forecast. Thanks for tuning in for another episode of Common Sense Market Analysis.